Thank you so much for this big turnout tonight. So we are great friends and partners to Kenetic itself. Kenetic, as you can see here, is a platform that has a couple of different interesting verticals, such as like advisory, investments, markets, community, and more importantly, technology. And today itself, we have a very interesting project called Caspian, who is actually sponsoring the entire event. So Caspian, Kenetic, crew, you want to raise your hands? Yeah, so if you guys are wanting to find out anyone from them, just give it a shout out later after this. I just want to do a very quick intro into why we are actually doing this panel, this whole series of panel and fireside chat today. As we've seen over this year, probably, there's a lot of different businesses that's actually entering into this space. Just a sense of a few of the room here, who actually works in finance as a professional right now? Keep your hands up there. How many of you guys are actually traders? Okay, how many of you guys actually work in, let's say, like banking or some kind of a sales or product management? For you guys here. Any blockchain developers here? Okay, great. How many of you guys actually own crypto here? Own crypto. How many of you guys heard of crypto this year? 2018? 17? 16? So we kind of get a feel of the room that people actually heard about crypto in 16. Fast forward 2 years from now, actually, we are seeing a lot of institutions come into this space and building their entire business around it. If you're actually running your own token sale, you would know the different vendors that you have to speak to today compared to probably a year ago. And on panel 1, we have a very interesting set of mostly traders, people who have been trading professionally for 5, 10, almost their entire careers. Following up, we have a fireside chat between John Frivelli as well as Dave from Caspian. And we'll round out the event with a panel number 2, which will be moderated by Casey, and mostly exchanges on the panel. So we have VBox, Hybrid, Kyber, as well as Sparrow Exchange. So without further ado, let's begin with panel 1, which is... but prior to this, just 2 housekeeping matters. Firstly, outside by the cafeteria area, you would see a laptop, see a machine. That's it's a very interesting questionnaire that you should fill up. And after you fill out, you would see some kind of a reward that you will potentially get from that. Yeah, just for reasons, I will not say what kind of a gift you get from that, but do check it out. Alternatively, you could scan the QR here. Actually, I'm very surprised that most phones don't come in with a QR reader. But yeah, you can scan this QR code here to find out more information about this. And there will be a demo as well outside on the round tables. So head over to here to watch more of a demo of the Caspian trading platform itself. Lastly, we have a very special surprise with how we're going to handle the t-shirts over tonight. So yeah, feel free to find out about it. So let's start with panel 1. Can we invite the speakers up in front? We have Darius from QCP Capital, Tony from Autonomy, Justin from Cumberland, and myself, I'm moderating the panel, as well as David from Caspian. Thank you. Okay, so let's give an introduction of yourself to the people here. Tell us a bit more about what you do and how do you relate to this topic about trading professionally in the crypto space.
Sure. Thanks, Sean. My name is Darius. I'm the managing partner of QCP Capital. My background is macro trading. I used to be a macro trader at Diamond Asia. It's a large hedge fund out of Singapore. And most recently, before I started QCP Capital, was managing the Asia FX and bonds book out of New York for BNP Paribas. QCP Capital is a crypto trading firm based out of Singapore. The large part of the business is prop trading, so we focus a lot on arbitrage trading as well as derivatives trading. We also run an OTC desk, helping the doing fiat to coin and coin to fiat conversions, doing altcoin execution. We do market making as well, so that's liquidity provision for tokens off exchange, on exchange. And finally, we do treasury solutions, hedging management, margin management, leverage management for projects. So pretty much a little bit of most trading elements in the space.
Hi everyone, my name is David Wills. So I am the co-founder of Caspian. Caspian is a trading or a crypto asset management solution, which essentially covers both the upstream and downstream aspects of managing a portfolio. So what I mean by that is the order and execution side of actually routing orders out, and then having all of that trade data flow down into the downstream component, which is a portfolio and risk management system. We're going to be talking a lot about Caspian tonight, so I won't go into too much detail. Otherwise, I'm also the Chief Operating Officer at Kenetic, and Caspian is a joint venture between Kenetic and a company called Tora, which is a trading system company that's been around for about 14 years and has 250 employees and services banks and hedge funds and prop trading firms. In my previous life, I ran a trading desk for a multi-strat hedge fund called Oxid Capital. So essentially has used that experience and brought it into the crypto space, and really through both Kenetic and Caspian, one of our central goals is to really try and institutionalize the crypto space. So I'm sure we'll go a lot deeper into those themes tonight.
Hello everyone, my name is Tony Sang. I'm based in Singapore and looking after the OTC trading business for Autonomy. Before this, I was trading FX options in Citibank for 4 years. And Autonomy is basically sort of a sales and trading shop in the crypto space. We offer the regulated index fund business, OTC trading, as well as the market making business.
Hi, my name is Justin. I work as the head of business development for a trading firm called Cumberland. Cumberland is one of the largest OTC trading desks globally. We are part of a large organization called DRW, which is a proprietary trading firm based out of Chicago. It's been around for about 25 years. We have roughly 900 employees. And in 2014, DRW expanded its trading business into the crypto space by opening up Cumberland as a market-making desk. Previously in my life, I also spent about the last 10 years in the hedge fund industry, always in either trading or fundamental analysis. So I started my career as a distressed debt credit analyst and then moved on to managing money, global macro trading, similar to Darius.
All right, so let's start off with the first question that I have here. Most of them here come from a very trading background, definitely. Spent about ranging anywhere from between 4 to 15 years in trading. What is some of the characteristics of professional trading that you are actually bringing into this crypto space? Crypto itself, as a market size, is definitely not as huge as the traditional markets. So what are some characteristics that you can or cannot bring into the crypto space?
Well, I guess, crypto trading and trading FX or equities is not that different. I guess the liquidity profile and the volatility profile has its idiosyncrasies, and it's a lot less liquid, a lot more volatile, as most of you would know. I think the most important thing that people should bring from the professional trading space into crypto would probably be risk management. Usually that is what the key thing that divides a retail trader from a professional trader. Just to give an anecdote, when I was at Diamond, they did an analysis of all the traders, and surprisingly enough, the best trader there had a 55% hit ratio, right? So the real thing that defines good returns from a trader is risk management. So that's something that we should bring to the space. That's something that Caspian is helping out with as well, in terms of their position management and risk management system.
Maybe let's keep this question directed towards QCP as well as Autonomy, because you guys are mostly running like a trading shop. Tony, what about your views? What do you feel about what kind of characteristics are you bringing into this crypto space from your past career?
Yeah, I definitely agree with Darius. That's a good trading system, a good risk control system, and the sort of risk-taking experience in the actual markets is quite important. So I think some of this stuff is kind of new in the crypto space, but it's very mature in the traditional finance. So that's why we're kind of taking a shortcut and try to hire the best people we can out of Citadel, out of KCG, and sort of try to take in a shortcut and bring some professional trading experience into the crypto space.
So Justin and Dave, you guys are mostly working on building your own platforms that actually trade. So what kind of characteristics do you see your platform that mirrors with the traditional world, or is it something that is an entirely different product on its own?
Well, there's some unique challenges within the crypto space that don't necessarily exist in the traditional space. I think, if you're setting up a long-short equity hedge fund, let's say, it's basically on a silver platter in terms of what you need to do. You sit down with your prime brokers, you sit down with all the various vendors that you might use, you set up a bank account, you have your offshore investment manager, onshore advisor. It's a very plug-and-play solution. Whereas coming into the crypto space, you're dealing with an extremely fragmented market. Custody is a very challenging thing because how you store your private keys and whether you do self-custody or try and use a third-party custodian. You have very limited banking options that you can go with. So there's all of these numerous issues that you just don't face in traditional asset management. So, when we think about Caspian, it's sort of trying to create a frictionless on-ramp, essentially, for any fund manager coming into the space to, in the first instance, have a platform that they can actually trade through, monitor their risk, do, stress test their portfolio, and ultimately service all the various different stakeholders, both internally, whether that's traders, analysts, and portfolio managers, as well as externally, like fund administrators, auditors, investors, etc. So it's really, trying to address all of these issues that fund managers face when they're setting up a fund in ways that are very familiar in the traditional space.
The fun part of going last is that everybody's taking all the easy answers. I think when we think about crypto trading now, you can start at the highest level. As David said, there are so many different areas of traditional finance that are plug-and-play solutions, and those don't exist in the crypto world now. Part of the reason why institutional capital is taking their time to enter the space because having to manage someone else's money and then give the keys to one of your employees is pretty risky on your reputation. I think also, some of the technological aspects of crypto, I always say this, and some faces here saw me at the panel last week, and I said the same thing, but the crypto market now is one of the only instances in history where the market and the interest has outpaced the development of the infrastructure. So when people talk about like algorithmic trading, for example, in FX or equities, the technology is so advanced. The algorithms, the speed, the connectivity is world class. That doesn't exist in the crypto space now, and so it's very difficult, for example, to run a lot of complicated algorithms or latency sensitive strategies. So that's one whole area of the market that does not exist. That if this ecosystem does develop, you will see more speed traders entering that. And I think there's other things as well. I mean, you guys touched on risk management, et cetera. One thing that I always think about when I look at the crypto space now is the fact that there's lack of regulation. Some people look at that and say that's an opportunity. I think of it as a crutch. And the reason I say that with such high conviction is because as a U.S. organization, it's been around for so long, we operate, and myself as well, and all of us here have operated in regulated markets our entire career. So you look at the framework and how one would operate in a regulated market, and you look at what is happening in the crypto world, and it's not exactly a mirror image. And so choosing your trading partners, choosing your vendors is very, very important because you want to make sure that your partners in this space are following the rules, especially if they are custodying your asset or there's going to be settlement risk, et cetera, because you just never know when the hammer comes down. And if the tide goes out and your partner is unveiled to be someone who's not operating in your best interest, your asset might be stuck with them, right? These are things that happen once in a cycle in traditional finance with banks going under, et cetera. But in the crypto world, all it takes is for one regulator to say, "I want to see your books," and then that trading partner, et cetera, might be uncovered.
Yeah, so Justin, you mentioned about custody. I believe about 6 to 9 months ago, a lot of talks were around how institutions are actually facing custody problems. Has that problem been solved today? What do you guys think across the panel? Have you guys seen any kind of like institutional grade custody solutions, or is this something that's still ongoing? I think it relates a lot to infrastructure in the entire space. You have compliance, you have AML issues, you have custody. How has that moved over the year?
Right, now I get the chance to go first here. This is one of my favorite topics because, and I don't mean to disrespect anybody who's working on a custody solution today. I think it's very difficult custody is all about reputation. It's all about confidence in the institution. I mean, the fact that the banks here locally I think they only insure up to $50,000 a deposit, but we all put our money in there assuming that for zero interest in many cases because we assume that it's safe. It's the reputation of the brand. I think people like me, but if I were to go out there and say, hey, I've created a solution, I don't think a lot of people put their money with me. So I think one of the things going forward in the custody space is the inevitable sort of rise of the banking sector entering into the crypto world. And this is sort of the predicament that the crypto industry faces right now, is that we look at decentralization, we say we don't want, banks or governments involved, but then when crypto's at, or BTC's at 6,000, everybody's saying, when is the institutional capital coming? Right? You want institutional capital, you have to show them respect. You have to understand that, institutional capital comes with reputation and professionalism. It's hard to have it in a decentralized world. And so most likely, I don't really know the answer, but my guess is there will be large institutions, whether it's Bank of New York Mellon or State Street. These are traditional custodian banks getting involved that will hold private keys, that will custody your asset. You can trust them. You can sue them if something goes wrong. And I call it the hybrid model, but maybe in the future, similar to gold or oil, you might have paper contracts traded on top of that, where the actual physical asset doesn't move on the blockchain. If I want to sell my Bitcoin to Darius, we can do that on a paper contract. The title deed transfers hands, etc. At the same time, if I wanted to do something on-chain with Sean and I had some extra Bitcoin, it's like walking down to the pawn shop down the street and buying a gold bar. I can just buy the gold bar and stick it in my safe, or I can just transfer Bitcoins to Sean, and it will actually move on the blockchain. So if you look back in history, I think gold is a great example. The volume, the liquidity in gold dramatically increased when the gold futures were launched. A lot of gold on these contracts, they just never leave the vault. It just sits there, right? And so it's possible that crypto will move in that direction as well. I know people are shaking their heads. They're like, "Oh, this guy's not a real crypto libertarian," but that's the reality we might have to face.
Yeah. Before that, I just want to urge, we're in this discussion here. I have seen before some topics where people are actually asking, the philosophy of blockchain itself is to trade it in a decentralized fashion. So just for this panel and the whole of tonight event, it's just about trading the asset class on its own.
Just to answer the question as well about custody and whether it's improved, I think it has improved. There have been better solutions that have come up. Solutions like BitGo are very useful for enterprises like us. But at the same time, there will always be pockets where you get exposed to counterparty risk because the liquidity of the market for certain tokens are in certain exchanges. So you're always going to face a problem with counterparty risk and custody solutions. There's no one blanket custody solution across the board. I think that's what's really missing. So something that can aggregate custody and handle the problem is still very much lacking in the space.
Yeah, just to add, I think there are a lot of things happening in the background around custody. You've seen announcements, partnerships between the likes of Nomura, Ledger, and Global Advisors early in the year. You've seen announcements from Northern Trust, and there's things happening, but I think it will take a while for there to actually be some elegance in the custody solution. And I think everyone that's deeply involved in the space is still scratching our heads how we actually evolve to that point. The fact that you still, to trade something on an exchange, you have to transfer the coins there first. There's this whole layer of operational process and control that any trader or firm needs to implement before they can trade effectively. So that creates a lot of challenges as you grow your company, your number of employees, and the complications with doing everything. To have those tight operational controls, especially if you want to attract institutional money in. So the industry definitely has a little ways to go in terms of how it's going to evolve. And there's obviously a lot of smart people working on it, but I don't think anyone really has the a crystal ball yet to figure out how it's all going to pan out.
Right, so there's a classical narrative that liquidity begets liquidity. How do you feel that Caspian is actually solving a problem like this? Is it, yeah?
I think, how is it solving? Well, a number of ways. I think, and I'll go a lot deeper into this later, but what we foresee Caspian being is essentially not only a platform that's able to manage all of the trade lifecycle, but essentially an ecosystem for all the different parts of the system, whether it's OTC providers, banks, wallets, fund administrators, decentralized exchanges, all to hook into this one platform. So essentially the end user has, in a very uniform interface, all of these liquidity avenues at their disposal. So, by way of example, right now, if you want to trade with an OTC provider, you typically need to ask for a quote via WhatsApp, Skype, some type of messaging app. They quote your price. It's all very manual. You then need to manually book that trade. Everything is just entirely manual. So the more you can automate that via APIs, and you can actually stream liquidity that people can point and click and trade, then all of a sudden if you do engage with institutions, these additional liquidity avenues should, beget more liquidity ultimately. So it's about building that framework, that infrastructure, getting the critical mass onto these platforms, and then ultimately it should, the network value, if you will blossom more over time. Not sure, maybe Justin.
Yeah. I mean, I think I totally agree with what Dave said. I mean, in the traditional finance world, you have a plethora of software vendors that can provide solutions. In the crypto world, that doesn't exist. Guys are running funds, logging into Binance website and trading on an HTML GUI. At Cumberland, one of the major benefits with our relationship with DRW is that we can just use the software that we've developed over the last 25 years and just change it a little bit for crypto. So the Caspian solution, I don't want to seem I'm promoting it, but it's necessary in the space right now to bridge that gap with the fact that there are no real sort of like software solutions that help people. And I'll give you an example, cut down on some of the slippages when you're trading online on a website. And one great example is when you plug through an API, depending on how the coding is done, the prices you see will refresh faster. Your execution will be faster. That's part of what we try to solve internally, and part of what Caspian would certainly try to do. And so I think more and more you're going to see kind of these solutions entering the space. And that's, again, that's part of the fact that traditional vendors look at the crypto industry and say there is opportunity, so why don't we adjust our business model and service that industry as well. So that's also part of the industry overall evolving and developing going forward.
Yeah, so the crypto space this year started in January at about 800 billion. Right now we are somewhere between 250 to 300 billion. Tony, this is a question for you because you see this a lot at Autonomy. How has this sort of like impacted? How has this impacted the way you trade, or the way you actually approach your clients who are actually looking for liquidity in the space?
I think this question is twofold. First, for liquidity of Bitcoin and Ether, which is the more liquid asset classes in the crypto space, we haven't seen a drastic change in the trading volume and in the client requests, because we have funds who are coming in and who are sort of trying to scoop the low, and we have project teams who raised money when Ether was 1,000, and now they're trying to sort of liquidate some of their cash to fund their operation. On the other hand, in the tokens market, we see a drastic drying up in the liquidity of almost all the secondary tokens in the market. So you kind of get into a situation where you go on exchange and you see bid and offer that's 5% wide, and then you go to the 10th offer and that's like 30% higher than the current mid price. So I think that definitely, the drying up of liquidity in the tokens market is definitely sort of having a big impact in the trading space.
So from all the panelists here, how do you feel, to what extent has this space been institutionalized? What other kind of challenges are remaining for this to reach a further stage?
Maybe I'll start. Well, I mean, like you pointed out, last year at this time last year, the market cap was around 200, 300 as well. So on the run up towards $1 trillion, the market priced in institutions coming in. That was priced in, and then it has been subsequently priced out. So basically, the institutions come in, two things, right? First thing, they look at ICOs and they see that there's no intrinsic value. They take a step back. Second thing, they look at the current infrastructure. Counterparty risk is too high, and institutions just cannot bear that. They take a step back as well. So the two things are important that I think would invite them back in would be to have token structures that have more intrinsic value, as well as proper infrastructure, proper risk management in the space.
Yeah, I think there's so many different ways you can sort of approach this. Obviously, regulatory frameworks, transparency around that, and having more robust frameworks that institutions can actually enter the crypto space. We're based in Hong Kong, and the SFC is somewhat ambivalent about crypto. They kind of have a very hands-off approach. I know down in Singapore, the regulators are a little bit more forward-thinking. Obviously, custody, which is, as we were speaking about earlier, is a big aspect. I think depth of product, so right now, you have a lot of these funds spinning up hedge fund fee type models when in reality pretty much everyone's a long only fund. You know, there's not that many different types of derivative instruments that you're able to trade and hedge your book. So you need a larger proliferation of different types of instruments. I think, you know, just broadness of instruments to trade. So, you know, most of the liquidity is concentrated in a very small number of actual cryptocurrencies. So, you know, as a lot of these protocols and cryptos gain more traction and adoption, then hopefully you see more liquidity and more products coming off the back of that. And then as well, like Justin was saying earlier, just if the institutions are going to come in, you need you know, more credible banks to be involved right now. You know, that's a huge challenge for the industry, and most of the top tier banks globally don't really want to touch crypto. So there's this negative perception that's obviously come about through a lot of frauds and scams that have come out, and I think the industry you ultimately need a lot of these projects to fail, and we kind of have a bit of a reset. And you know, the adults that are still sort of in the space and trying to better the space will hopefully have enough of a strong foundation from which to build on then. So there's still a ways to go, but I feel like, you know, the good thing about the bubble earlier this year is it draws in a lot of intellectual talent, and it draws in a lot of capital and interest from people who otherwise weren't really paying attention. So long ways to go, but I see a lot of building blocks happening this year.
I think to me it's definitely the regulatory framework that matters the most, because I think until there's a transparent regulatory framework across the globe, the institutional players, or so-called the real money players, they won't go into the space. That's why we're trying sort of really hard to work with regulators around the globe. So I think Justin is pretty aware that DRW Circle and us, we had a closed-door meeting with CFTC President Giancarlo. So basically, we spent the whole day talking about regulations around Bitcoin spot trading. So I think until we sort of figure that out, and until regulations are in place, it's difficult for institutions to come in.
Yep, totally agree that the regulatory angle is a big one. The custody angle is probably the second biggest one. But I think some of the positive things in the space are, you know, as David mentioned, when I came into the office earlier this year, like Bloomberg, every day on the TV is talking about Bitcoin. And I'm like, what the heck's going on, you know? So the fact that it was just drawing so much attention, more and more talent, and this again is the irony of the crypto world, is that guys in capital markets, I don't want to use the word finance, I might get crucified, but capital markets guys are moving into the space who understand how regulated, you know, free markets actually operate. I think in the crypto world, whether or not we look at it as technology, which it is, it's phenomenal. But at the same time, it's still a capital market, and as it develops with futures and derivatives, et cetera, you know, options, it will become a more robust capital market, just like the CDS market happened in the early 2000s, or the equity market originally in you know, and then the tech bubble after that. So as the space starts to develop, it'll attract more talent that comes in that understands how to actually build around the underlying technology. You know, if you want to, what is ICO advising, for example? Like, how do you do an ICO, right? Investment bank, you have investment banking division, you have, you know, advisors, you have investment bankers, they all specialize in these things. So the fact that there's more talent moving in, the fact that there's so much capital, I think, being raised and thrown at this industry already, means that, you know, the ingredients are there for it to grow and flourish. It's just a question of whether the industry itself can progress in a healthy manner before making mistakes, and mistakes will certainly happen, right? But, you know, overall, the question is, does it continue to grow and at what pace?
Yeah, I do agree there's a lot of coverage that's happening this year. I believe on Bloomberg, you see across like different kind of like media channels, you're seeing a lot more talks about Bitcoin and about the whole institutionalization of the whole space. You have Bitcoin ETFs approval, you have all these kind of different news. David, you talked a little bit about products earlier on. What kind of products do you think the crypto market is just not ready for at the moment right now?
Not ready for?
Yeah. What kind of products or what kind of derivatives is not ready at this point in time for the crypto market?
Well, I think you need to see more underlying liquidity in the spot instruments that are trading in order to you know, have options and futures trade on top of them. So I think as the exchange infrastructure evolves, like certainly, with the likes of CME, CBOE, there's obviously the ICE announcement earlier about BAC. I think there was an announcement today or yesterday about NASDAQ. I think, you need to have, I guess, larger exchanges trade a lot of this stuff first before you can see instruments. It's going to be small steps. I think futures are great. We need an ETF at some point. Once that's off the ground, I think it's really you're gonna go down the food chain in terms of an Ether ETF, maybe a top 10 ETF. But I think you need the right risk parameters and framework in place for all of these additional products to come. And I think from a regulator's perspective, they want to ultimately protect retail investors, right? I think the global financial crisis in 2008. Really put all the regulators on notice. And those of you from Hong Kong will remember outside HSBC, there were demonstrations for like a year for the Lehman mini bond collapse. So I think that's still really fresh in regulators' mindsets, and I think they're obviously taking an extremely conservative, rightfully conservative approach to crypto. It needs to be baby steps before a lot of these additional derivative products can be introduced.
So let's say if, just a last point for this panel here, if I were to start like a fund tomorrow, or anyone here in the room wants to start a fund tomorrow, what are some of the topics that you would talk about in terms of philosophy of a fund, risk management, as well as any other kind of like strategies, tools even to be used?
Yeah, I mean, I think there's so many different kinds of funds. If you just want to run like an index or a long-only fund, and your investors know that, transparency is always number one and most important. The investors need to understand the risks that they're taking entering a highly volatile asset class, I think just understanding how to build infrastructure and be patient about it. So making sure you have the right legal counsel, the right fund administrator, etc. Again, just making sure that you do things properly so that you can withstand the swings in the industry and you can build a proper institution in the long run. Or if your goal is just to make a quick buck, then go ahead. But I would say you want to do things properly from the beginning. There's a lot of excitement around the industry. There's a lot of potential financial and economic benefits of it. But it's much more important to get it right because we're still so early. That's certainly how I feel. That you want to make sure that when things do start becoming mainstream, you're in the right position to be able to catch that wave. So I urge people not to skip steps, effectively.
Sure, I think I definitely agree with Justin. And just to add on to what he said, I think talent in the traditional industry is it's sort of a shortcut, like, as I mentioned before. It's just like trading experience, risk control. We can borrow this from traditional finance space and put it into crypto and start a fund.
Yeah, I think what Tony and Justin said is right on the money. I think as well is what really is important is like immerse yourself in the community. At the end of the day, what's really struck me coming into this space is how tight-knit the community is. Like, it really feels very collaborative. Coming from finance, it was a little cutthroat, it was very competitive between funds and banks, etc. Whereas in the crypto space, it's sort of like the sum of the parts is greater than the whole. So, events like this, and we, one of the co-founders of Kenetic, hosts the Ethereum meetup in Hong Kong, and it's great to see, even the time that I've been in the community, how much it's grown and the interest levels coming in. So, because of all the challenges that you ultimately face coming in, the more that you can lean on, different peers within the space and share ideas and collaborate, ultimately we'll all be stronger as a whole.
Yeah, just to add on to all of that, one of the reasons why we're all here is that we see the similar parallels in the crypto space to the traditional finance space. Parallels not just in structures, but in terms of growth as well. So I would say there are a lot of opportunities. Being long only is not the only opportunity. As the infrastructure evolves, there are a lot of idiosyncrasies, a lot of inefficiencies that can be used for profit, as well as for people at this stage to join in the development and to participate and to contribute to the development of the whole space.
Okay, I think we have time for maybe one or two questions. Does anyone have any questions? Yeah.
Thanks, guys. My only question is, there's a lot of discussion about risk management in this space. So if you look at traditional finance, the ability for fund managers to measure that risk is the whole plethora of historical data and reference points. In the space, you have a very young, evolving market. So how much of that is actually applicable? How accurately can you actually measure the risk? And if there are risk tools, what are they that you guys are using?
I mean, Caspian is basically aiming to address that. So we do have a risk management component where you can ultimately stress test your portfolio, look at the various correlations between instruments, etc. But really, when we think about the portfolio that we run, it's taking a lot of the principles that at least we had in our previous lives as asset managers and looking at, volatility measures, certain events, how exposed you are to the market, etc. And I think it's really just about being disciplined and making sure that you have, depending on what the mandate of your portfolio is, that you actually stick to that. I think the strange thing about this space is there's so much animal spirits really guiding how the cryptocurrencies move. I mean, the realized volatility is like really high, like much higher than traditional markets. So if you get too caught up in that and sort of try and outsmart yourself, you can get undone pretty quickly, which is, I think, what a lot of funds have experienced this year. So really just bringing in a lot of those, discipline and structure is what's required for sound risk management. But then as the space evolves in terms of products and actual tools and sophistication, I think you'll see more robust risk frameworks come into play.
Yeah, I'll add a little there. I think, one of the first things my mentor told me is that the market will always be there, right? You're just not feeling it, or you're going on tilt, to use a poker term. You can walk away and it'll still be there tomorrow. As David said, realized volatility is so high, you'll have plenty of opportunities. So I think, the traditional skill sets from regular markets, like risk management, what does that mean? It's understanding expected value, it's understanding when something is not working, when you're expecting a behavioral pattern to emerge in a certain way and it's not there, then you're probably wrong, right? All these different experiences, when you've stared at screens and tickers and prices move over the years, they 100% apply in the crypto space, and precisely for what David said, which is the fact that there's so much animal spirit in this market. It's actually one of the smoothest markets I've ever seen. So just be patient about things, right? I mean, it's very difficult to make money in anything in life. Certainly making quick money overnight it should be more difficult.
All right, let's give our panelists here a round of applause. Thank you. So right up next we have a fireside chat between John Firelli as well as Dave Wills.